Welcome to Explain the Charts, where we break down the noise to find the signals in the market data. Today is April 30th, 2026, and the Bitcoin market is navigating a complex web of macroeconomic shifts and technical hurdles. We have recently seen Bitcoin slip toward the $75,000 mark, a move largely attributed to the Federal Reserve maintaining current interest rates. This decision seems to have cooled the momentum of what some analysts were calling the Warsh pivot party. Geopolitical concerns, particularly involving Iran and potential impacts on the S&P 500, continue to weigh heavy on investor sentiment. Furthermore, news of the SEC reviewing a massive 85-item proposal regarding ETF listings has kept institutional players in a state of cautious observation. While Uzbekistan offers tax holidays for miners and Russia legalizes crypto for global trade, the domestic U.S. front remains fixated on bond market volatility. Institutional activity remains mixed, with spot Bitcoin ETFs seeing substantial inflows early in the month followed by recent drying up of liquidity. We are also seeing headlines regarding Michael Saylor's strategy and whether large-scale institutional selling might eventually enter the conversation. Against this backdrop of news, we must look at the actual price action to determine the true strength of the current trend. Looking at the daily chart spanning back to late 2024, we see a Bitcoin market that has undergone massive structural changes. Following a peak near $126,000 in October 2025, the market entered a period of extreme turbulence as we turned into 2026. One of the most striking technical events occurred on February 5, 2026, where we saw a massive 14.46% drop in a single day. The price crashed from an open of $73,281 all the way down to close at $62,683 with extreme volume. This capitulation was likely driven by the $875 million wipeout attributed to the rollout of new tariffs and high-frequency liquidation cascades. However, the bulls managed to defend the $60,000 psychological floor, which has since proven to be a generational bottom for this cycle. Since that February low, Bitcoin has been carving out a steady series of higher lows on the daily time frame. We saw a strong recovery rally through March 2026 as the price reclaimed the $70,000 handle with relative ease. The rally peaked recently on April 22nd, when price touched the $79,523 mark before meeting significant resistance. Currently, we are seeing a minor pullback that correlates with the Fed's stance on rates and the subsequent cooling of risk on assets. Switching over to the 1-hour chart to analyze the more recent price action, we can see the anatomy of the April rally in finer detail. Throughout mid-April, Bitcoin traded in a very controlled upward channel, finding consistent support at the $71,000 level. Note the breakout on April 13th, where we saw a surge from $70,755 to over $74,000 in a matter of hours. This momentum carried us to the local high near $80,000, but notice the flattening of the VWP as we approached that zone. The price has recently struggled to sustain any momentum above $78,000, suggesting that sell-side liquidity is heavy in that region. Yesterday, as the Fed news hit the wires, we saw a sharp rejection from the $77,000 area, sending us back toward the $75,000 support zone. This 1-hour view highlights the current range-bound nature of the market between $75,000 and $78,500. We are seeing shorter-term moving averages beginning to cross downward, which typically signals a bearish shift in intraday momentum. However, the volume on the recent dips has been lower than the volume on the preceding breakout, which may suggest this is a healthy consolidation. Traders should keep a close eye on the $74,800 level, as a breach below that could invalidate the short-term bullish structure. Dropping down to the 15-minute chart, we can analyze the immediate reaction to the news cycle from the last 24 hours. Notice the high-frequency volatility that occurred during the late hours of April 29th. We saw a rapid descent where Bitcoin lost nearly $1,500 in value over a very short window, testing the $74,912 low. This level acted as a spring, with immediate buying pressure stepping in to push price back towards $75,700. We can see a series of small, indecisive candles forming right now, which suggests the market is waiting for the next catalyst. The VWP on this time frame is currently hovering right around the $76,300 mark, acting as a dynamic ceiling for the price. If the price can close a 15-minute candle above this VWP, it may signal a retest of the $77,000 zone is imminent. Conversely, the repeated tests of the $75,000 floor indicate that demand is being absorbed by persistent sellers. Short-term traders are likely looking at this $75,000 level as a must-hold point for any long positions. A breakdown here would likely trigger stop-loss orders, leading to a quick move down toward the $73,800 support shelf. Returning to the big picture on the daily chart, we need to assess the overall trend health. Despite the recent 5% pullback from the April highs, the long-term trend remains fundamentally bullish. The recovery from the $62,000 lows in February has been orderly and supported by rising transaction counts. We have established a clear support zone between $70,000 and $72,000 that would likely attract significant institutional buy orders. On the resistance side, the $80,000 level is the current boss level that Bitcoin needs to defeat to enter a new price discovery phase. Analysts are pointing to the upcoming alt season, predicted for May 2026, as a potential driver for overall market liquidity. If Bitcoin can maintain its dominance while consolidating, the eventual breakout could be violent to the upside. However, we cannot ignore the threat of further interest rate delays, which could see capital rotate back into bonds. The correlation between the S&P 500 and Bitcoin remains high, meaning any traditional market dump will likely drag BTC down. We are currently in a wait-and-see zone where patience is the most valuable tool for any trader. To recap our technical findings, we have identified 3 major price levels to watch with high priority. First, the $75,000 mark is our immediate support floor that has held firm over the last 48 hours. Second, the $78,500 resistance level must be cleared to resume the uptrend toward the $80,000 psychological barrier. Third, the $71,000 level serves as our ultimate long-term pivot. Staying above this keeps the macro bullish thesis alive. I would predict a 60% likelihood of Bitcoin continuing to consolidate within the $74,000 to $77,000 range for the next week. A breakout above $78,500 would increase the likelihood of a run to $85,000 to about 75%, assuming spot ETF flows return to positive territory. Conversely, a daily close below $74,000 would signal a 70% chance of retesting the $70,000 support zone. Look for the upcoming U.S. jobs report as the next potential trigger for a volatility spike in early May. Always watch for a divergence between price and volume, as low-volume breakouts are often traps for retail traders. Please remember that this analysis is based on historical data and current news, and market conditions can change rapidly. This video is for educational and informational purposes only and does not constitute financial advice. Always conduct your own thorough research and consult with a professional before making any investment decisions. Thank you for watching Explain the Charts, and we will see you in the next analysis.